Hello, my name is Steve Bigelow with the Candlestick Forum. Today we saw some very strong bearish trend signals that when you understand what the each signal represents, you get a much stronger indication of what the market is doing. For example, notice how the Dow opened and traded right up to the 50 and then failed. What became a strong sell indication was when it came back down, not only through the T-line, but back down through the open. That told you they were not taking this market up. You add the fact that you had the NASDAQ opening right at the 50. And here is where the visual aspects of candlesticks give you a huge advantage. You could see that once they started or they opened, they immediately started selling off. Told you they weren't taking it up. And until they did turn around and take it back up through the open, you have to assume they're not buying. And notice where the NASDAQ finished. Not only after failing up here, but closing below the previous day's open, creating a bearish engulfing signal, and closing below the T-line. Well, that's pretty obvious. This area told you the sellers were in control. They weren't taking it higher. Same scenario on the S&P 500. They opened it right at the 50. They closed below the T-line. They closed below the previous day's open, creating a bearish engulfing signal. The probabilities are we're still heading in a downtrend. Now, we knew what the elephant in the room was. NVDA. Last night after earnings, they were up $60. However, you can see what type of signal it created today. A bearish belt hold. And after hours, it was even trading down lower. The Japanese race traders identify a bearish belt hold as when they gap it way out of the trading range and then come back into the trading range. That tells you the fizzle has gone. So you can use that information that if this was the instigator for bullish sentiment in the market and it's doing a bearish signal, you can identify which signals and patterns are working effectively in a bearish manner. So you can see how the T-line produces an immense amount of information that you have a wave one, wave two, and then bearish signals failing right here at the at the T-line. Where do you think the next logical target's going to be? Down here. Again, this dramatically improves the probabilities of being in the right place at the right time. So when you understand what each signal represents, it gives you a much better feel for when you should be out of a short trade and when you should be in a short trade. So is this a market to be buying? Well, when you see Apple trading back below the previous day's open and closing below the T-line, what can you assume about the bullish sentiment of this chart? It's gone. As a matter of fact, you're probably back into a bearish mode. So the information built into each candlestick chart gives you a strong indication of whether the bulls or the bears are in control. And this doesn't necessarily mean you use the signals at specific levels. You use the signals to tell you what's going on in the overall trend of a price move, as we see in Taiwan Semiconductor. This is in a downtrend where they tried to take it up, but have a strong sell signal. If this opens lower, assume this downtrend remains in progress. So there's a lot of information that we provide just identifying or understanding what each individual signal represents or what a price pattern represents. So join us. If you haven't become a member of the Candlestick Forum, try the 2-week free trial, because not only are you being exposed to the candlestick signals and patterns, but when you understand why those signals and patterns work, you have a control of your own investing versus listening to what all the so-called talking heads experts are telling you. That'll be it. We'll see you in the chat rooms.